Right, so we're back with the group chat, and this week we are actually, I'm actually really excited about this because me and Tom have actually spoke about these type of talks for a couple of months really, and I've wanted to get you in. So this week I've brought forward a very special guest. His name is Tom Callan, and he is part of the MBE Academy, and he's come to sit down with us today, and we're just going to talk about some money talks and get into a bit of a chat around some financial things I think that would be very useful for us budding entrepreneurs that are out there and business-minded people. So before we dive straight into it, Tom, just give yourself, how you doing, man? You good?
Yeah, not too bad. Yeah, not too bad. Just busy. Trying to stay as busy as possible. Yeah, pretty good. Everyone's healthy, so can't complain. Yeah.
I think that's one of the biggest takeaways from this year. I think it's just being grateful for the little things, what everybody's got, kind of family, friends, all those things this year. I think just to kind of get you through the mundaneness that it has been. 2020.
Yeah.
But we're getting to the back end of it now, and we've got hopefully Christmas and the holiday season to look forward to. So hopefully a lot of people have got the Christmas trees up at this point, and they are looking forward to some getting less of a lockdown as whatever they're going to put it, whether in with tears or whatever. So I'm glad that you managed to come and sit in with us, because I have really wanted to pick your brain for a while, but not only for my own benefit, but I just think so many people could benefit from these type of conversations, and I'm not 100% sure that there is a wealth of knowledge out there when it comes to some of this stuff. So I did want to speak to you about kind of financial literacy and that kind of thing. So I know before we get too deep into it, we both kind of seen something about a little viral incident that was published in the Echo the other day. And it was a throwback photo of how's it going to where we are now. And it was this girl, she went to university.
Yeah.
She's done a law degree. She's obviously passed. I don't know if it was a 2-1, but she's passed. She's done fairly well. And then versus how's it going now? She's applied for a job in McDonald's because again, like everybody, the COVID's messed up a lot of people's situations. The type of jobs she probably wanted to apply for aren't probably taken on. So she probably wanted to keep herself busy and keep working, which is, good for anyone really, that she's got that level of drive in her. And she's got past one part of the process, the application process, and then she's been KB'd the second part.
That's killer, yeah.
And she's just literally published it out there, and she kind of did it in a bit of a tongue-in-cheek way, which I think was quite cool as well. She kind of just took it on the chin. But it just goes to show, people have been saying it for years, is it really worthwhile going to university? How beneficial is uni in this day and age?
Yeah, well, I think it's a very important question. And to be honest, I mean, other than giving sort of help to youngsters and financial advice, I have a lot of students, and some of which are at university level, and quite rightly over the past 6 months, even 2 years maybe, I've had more students say to me, listen, Tom, there's more competition now, more graduates coming through, there's a lot more courses, even with the hiking fees, and what I've noticed, there's a lot more people saying to me, listen, even though it was difficult, it was expensive, is it worth doing a master's? So it's going to that next level of university's almost becoming the norm.
Why do you think that was? Because when we left school, you're a year above me academically, so when we left school, it was only $3,000 to go to uni, and I think that was why it was accessible to a lot of people, especially if they was from more working class backgrounds, and they kind of realised how much over a 3-year course it's going to cost me, $9,000, and I'll end up with my degree. Whereas a couple of years later, if we would have been 2 years younger, maybe, you would have been expected to pay £9,000 a year for your course, the same course. So the education couldn't have changed that much in those 2 years. No. But the price changed drastically. But
of course,
more people are still going. So what do you think was the driving force behind that?
To be honest, there's no real logic, because, I mean, look at anything, nothing triples in price overnight. I mean, even cars, you know what I mean? If they start high, they come down
Depreciate,
quick.
don't they?
But I mean, I look back now, Freddos were 10p when we were younger, and now that I look 25p, but that's not compared to going from $3,000 to $9,000. But I mean, it's all relative really, because I think way back when, for some of the older generation, uni was free.
Yeah. So and in Scotland as well, that's one of the things that they've got that package, haven't they?
Definitely. I mean, I like Glasgow. I didn't think I'd ever relocate up there just to get a free education.
Yeah.
But don't get me wrong, there's other parts of the world, like for America, for example, whereby some of the Ivy League stuff, you're looking at maybe $50,000 a year to go. So,
well, I've seen even this year, because of that, people were still getting told that like Harvard students and that they wouldn't be on campus, they'd be working from home, but it was an online course, but they'd still be paying the same tuition fees.
Exactly.
It's ridiculous.
And if anything, what I've noticed is for those students here in the UK, the US, I mean, I've got some students based in Switzerland, Ireland, parts of America, and it's like they're still expected to pay the same amount of fees, but if anything, the quality's dropped off because the textbook they get told to read is the same, but the delivery's not there because it's hard enough trying to get hold of lecturers as it is, even when you are there on campus. So imagine what it's like now when they run up to Christmas, COVID, and...
So how did you get into the kind of setting up the MBE Academy? How did you transition from being a financial advisor to then kind of giving people that knowledge as well and sharing what you've learned?
Yeah, well, to be honest, I mean, I've always been the type of person, I always wanted to help other people. And so if you like, I might not know, if you ask me where, I don't know, Geneva was on a map, I couldn't tell you, but anything to do with maths, business, numbers, finance, I'm probably a reliable source. So from the age of 16, it was maths, business, economics, undergrad, business economics, masters, economics, finance, and then obviously doing professional qualifications in wealth management. So I thought, well, you know what? I struggled at times during my school days. So I thought, well, there's definitely going to be people like me, but younger. So I thought, well, there's definitely going to be demand for people who want help. And back then, when I was studying, I couldn't necessarily afford a tutor as such, and I didn't have private school or nothing like that. So it was a case of, well, given a solution that I know people would probably appreciate at a much affordable rate than what the universities charge, because as you say, it's tripled.
Yeah.
So trying to really fill that gap in terms of the drop in quality and the increase in price. So yeah, and that sort of evolved because I work in industry doing the advice day to day. Obviously, I can apply that theory that I learn. So one thing we talked about before the show started was the fact that a lot of people learn this stuff, but they don't really have the environment to be able to apply it.
Yeah.
So I felt as though, again, I was quite credible in being able to help people because I do it. You don't have to really big yourself up because you think, well, if you're a professional footballer, you don't have to walk around with a Liverpool kit on because you know you play football. So it's one of them, really. And then from there, it's sort of, because you're a credible source, I mean, imagine being a personal trainer and you give people really good advice on how to lift the weight or what programs to use. Naturally, they'll say, well, any tips on our diet, or where should you buy supplements from? People tend to start to ask you questions relative to that area. Yeah. And so I started getting things like, well, I want to be a fund manager. I want to be a financial advisor. Can you help me with the job application? I graduated a few years ago. I'm saving for the house. Can you tell me where the best bank account is or how a mortgage actually works? And so it all centered around just helping younger people. Anything to do with business, finance, economics, setting up businesses, investing, pensions, and it just sort of grew from there, really.
And because we were saying as well, like, my thing is I didn't go to university. I've pretty much worked since I was 16, either for myself or worked for somebody in one capacity or another. My thing was always, I didn't necessarily think uni would have been that beneficial to me and my interest when I was a little bit younger, because again, unless I'm going to go and do a specialism and specialise in something, just to have a generic, not necessarily, I want to say generic because a degree, I feel like they've become more generic over the last couple of years, and just having a business degree, it doesn't really ooze the same appeal it might have oozed in the early 2000s, do you know what I mean? Yeah. When like people are now, I've got a business degree and I know a little bit about computers and ICT, so I'd be really beneficial to your company. Could the experiences and the know-how that you've now acquired, do you think you've only been able to get that by going down the route that you have?
I would say so. For my particular position now, what I do, I mean, I deal with a lot of money for private clients. And so I feel as though, I mean, if you flip it on its head and you have some empathy, you think, well, if you were going to entrust someone with your life savings, you would want someone who has tried everything they possibly can to be as clued up as possible when they're dealing with your money. In the same way, if you're having heart surgery, you would want the best guy, regardless of whether he's done an apprenticeship or a degree. You just want the trust, the belief that that person on the other side of the fence is knowledgeable enough and credible enough to do you best, basically. Which
is why I think from a uni's perspective, if someone was to always ask, like, not like, why do you want to ask my advice about going to uni? Or maybe they would, because I haven't. But I'd always say yes to university if you're going to be, as what you just said, you know, a heart surgeon, or you want to be a dentist, or you know you want to be a lawyer and you're going to go to law school afterwards, or you're going to get your math, or your engineers. Those type of fields, I feel like going to uni to get your degree will always serve you well, because that area that you're going to do is very
niche.
It's very niche, and you've got to have a certain level of expertise to do it. Whereas to then just flip it and be on the other side, where you might have done like business admin, or, you know, kind of like the business logistics side of things, you can get those experiences and you can get that knowledge working for a great company from very young, doing an apprenticeship, working your way up, doing, you know, within that apprenticeship, doing 5 to 6 different departments, kind of cutting your teeth on them all, and then basically being like, this is where, now you're 22, 23, this is where I want to go. You spend the next 4 years doing it, and before you know it, you're on a 35+ grand job because you've worked your way up. And I'd always say, and I think that's probably the most difficult thing as well. I don't think young people, and I know, you know, I might be a little bit different, but most young people that I grew up with at 17, 18 didn't know what they wanted to do. So to make that kind of conscious decision that, all right, well, because I'm not going to be doing something that's really niche, as you say, I won't go to. I don't think enough people know themselves well enough yet to make them decisions. So they just, as you were saying before, fall into uni. It's the trotting path, the well-trodden path that people just go on.
It's a really interesting debate, and it's probably one that there's no definitive answer. And I mean, any half-decent economist will say to you that, well, we can only really go off averages. So basically, whilst it might not work out for some people, and some people who don't go to university don't then go on to make their own businesses, become really successful. All I would say in my experience is, for those that sort of, even if they didn't know what they wanted to do, but worked hard enough and used the time effectively to make connections, get part-time jobs, get the internships, whatever, as long as they have enough about them to make things happen, then it doesn't really matter what degree subject you do, because you will, at the end of the day, it's an opportunity. And one thing you said there was the fact that you don't really, who knows what they want to do at 18? No one. And what I would say is, although you're paying, I don't know, 9 grand a year, and you get a piece of paper at the end, you're not really buying the piece of paper, you're buying the time to find out for 3 years who you are, what you like, meet new people, create connections.
In this new kind of way of doing things, then, do you feel sorry, or do you empathise with the lads or the girls that have gone into year 1 uni in September and August, because they're probably still paying that same, but their experience is going to be completely different than the uni students before then, before them, do you know what I mean?
I mean, don't get me wrong, some of my students that I teach, I say, listen, you should be emailing asking for a refund, because you're not getting the same value of service. It's like going to McDonald's and paying a £5 for a Big Mac and not getting the bun. It's it's the same price, but I'm not getting half of what I expected. And what I would say is, as I say, it's just a case of,
because I think people get into that mentality as well then, like, oh, I'm going to uni, I'll go to uni, but I'm not going to pay it back. And I'm thinking, if you go to uni, you want to be leaving with a job that does pay your uni loan back, do you know what I mean? You don't want to go and just end up on a, you know, an entry level position for until your retirement age, just because so you can avoid paying back 27 grand. I just think that's backwards thinking more.
No, definitely. I mean, the only other thing about that is, of course, everyone knows, unless your parents pay for you or it's funded, your university degree, you have to take out a loan. And one thing we'll probably touch on later is, there's a difference between good debt and bad debt. Because you'd much rather have 27 grand debt for a degree, which is a signal of your ability, as opposed to 27 grand for a new car, a new Audi, for example, which will depreciate the day after you buy it. And also, it's not going to help you get a job. So it's a case of, inevitably, everyone's going to have to take on debt, mortgage, university fees, credit cards. It's just a case of, well, what's worth it? What's worth it, and what will elevate your prospects? Not to say it's a guarantee, but it's all about what can improve your chances of doing better.
So you're like on Martin Lewis in this little aspect there, do you know what I mean?
Honestly, and you've got to think as well, if you own a business, whether it's music production or financial advice or a tuition business, ultimately, to grow your business, you need to hire people. So who you're more likely to hire? Well, without knowing the name or the family background or how they like the cup of tea, you're going to look at qualifications, and you'll probably say, you know what, there's no guarantee, but you're pretty much going to go with the guy maybe who is a bit more educated. Even if yourself, you didn't, because you think, well, that 27 grand is a signal of their intention to commit themselves to something to do better. And And there's a good chance that someone with the debt will make it work because they know they've got to pay it back.
Yeah,
so there's a lot of sort of pros and cons really. And just one final point. I mean, I've been to unis. I talk a lot about you've got price inflation. So the price of Freddos, we said, goes up every day, and cars, etc., houses. But there's qualification inflation, which means that basically, because more of these students are getting the GCSEs, the A levels, the O levels from 30 years ago, the masters, it means that if you're not doing that, even if you don't want to learn, other people's perception of you will think, well, you're not keeping up to date, so you mustn't be as smart as everyone.
Okay.
So even though you've got a specific view on education,
Yeah.
in some ways it's overwritten by
everyone else's view on education.
Exactly. So even if you're not willing to take on the debt, then someone else is.
Okay.
And that alone might be the difference in you getting a job in London where it's competitive
Yes.
in law or not.
Okay,
So it's about thinking about, not so much about what you want, obviously that's important, but bigger picture.
How will you benefit the wider community,
Exactly,
business
yeah.
community, that kind of thing. Okay, I like that. Well, moving into this year then, and kind of, I've heard a lot of people talking about, I don't really want to go too like conspiratorial when I say this, but I want to say it in the right way, because I do genuinely think this was a natural progression of where we was headed anyway in terms of money and finances. Going cashless, I think it was just going to be a given. I think it was like genuinely just going to be the way forward now. But one of the big cashless kind of commodities, so to speak, or kind of like savings is Bitcoin and stocks and stuff like that. What do you know much about? I assume you know enough about it, but like, what can you share with us really about what you've seen and up to date with now? Okay,
so in terms of sort of, I'd just say the movement towards cashless society. So you've seen the introduction of sort of contactless payments and cards, and especially with COVID, they don't want to handle cash. And you could argue there's a degree of conspiracy theory whereby the government, it's an easy way to keep on track of what people spend the money on, keep on top of corporate taxes. We know a lot of companies are getting away with offshore accounts and not paying the right amount of tax. So, and that's not just at the higher level, it's sort of one-band sole traders who are just sort of taking cash payments. So there's reasons.
Wasn't that the other thing as well, when people, was it the Thingio loans, the bounce back loans this year? A lot of them have already been flagged for fraudulent activity because a lot of people were basically just writing, this is what I want.
I mean,
he wasn't going through the proper due diligence process, and he was getting accepted within 24 hours, and some of them were like up to 50 grand.
I mean, I'm thankful in some ways that the support's there, because people are very quick to sort of slate the government and all the rest of it. I'm either side, to be honest, but there were people who desperately needed those loans. And so whilst there will always be an element of the population who will take advantage,
opportunists,
I mean HMRC, the tax office, they're not soft. They've got lots of systems and stuff. They've got national insurance numbers. They'll do the due diligence, not just going to give away money willy-nilly.
But the banks have underwritten 95% of them, haven't? From what I can tell. So that kind of almost suggests that, like, push come to shove, if they really want to send for anybody, they'll just send for the banks.
Of course,
because they don't really need to go for the national insurance number of you or me. They just know it was underwritten by HSBC, so we'll go and get the dough back.
And in some ways, there's a bit of risk there, because obviously the banks can't. I mean, you've seen from 2007, 2008, they can't really afford for any banks to go under. So, and don't get me wrong, we're looking at companies who are fraudulently claiming these bounce back loans because they were pretty much low interest compared to what you could get elsewhere. But I mean, some of the banks, I believe they were at some point asking people to sort of have some form of collateral against the business bounce back loans. So it's a case of everyone's trying to cover their own back really. You've got a one-man band business who needs a bounce back loan, not because he needs it, because it's better to have 10 grand on a low % interest in his bank account as opposed to worrying about where the next customer's going to be for the next 3 months. So it's an interesting one really. But going back to the cashless society, you mentioned Bitcoin. It's come
and
to the
stocks,
fore.
Really, both of them really. I'm interested in them both, and I'm not going to pretend like I know much about either of them. And I feel like stocks reminds me of gambling.
Yeah.
Bitcoin is more of an asset from what I can gather to have, but getting hold of it and utilising it.
Yeah.
It's only becoming, I feel like MasterCard, I think I read something the other day, MasterCard are going to make it accessible for 2021 so you can purchase with it through them.
To be honest, I mean, this is just my opinion, obviously. Now, for someone who's pretty much studied finance, business, economics, give financial advice on a day-to-day, my opinion is I don't know enough, even I don't know enough about Bitcoin to even venture into it. And a famous investor, Warren Buffett, said you should only really invest in things that you know enough about or you care about, that you're willing to read up on. And a red flag for me is, whilst there have been stories, have people invested in Bitcoin. I mean, you know, your postman Billy who bought some 300 quid and now it's 1,000, and I wish
Billy.
Bitcoin Billy, exactly, and how we should have all sort of jumped on it, and it's become sort of the talk in the pub, but you never really hear about the guys who lose money. There's lots of different variants of Bitcoin, types of digital currency, and
do you think we whether it's Bitcoin or not though, do you think at some point that is just going to be the norm, and we are going to have a kind of digital currency that will be universal?
Well, to be honest, I mean, I feel like it's somewhat inevitable, but whether we move towards digital currency or just your standard PayPal, your bank transfers using British sterling or US dollars, I mean, to be honest, until the banks start taking it seriously as a form of currency. So what I mean by that is, you could save for a deposit for a house, and they'll ask, where are your source of funds? You want to pay into a pension, set up an account, and they'll say, where are your source of funds? On that list, they do not qualify Bitcoin because it's being related to the underground or the black market, if you like. So until it starts being taken more seriously from banks, I don't care whether you can make 2,000, 5,000%, because if whoever I want to give that money to is not accepting it, then it might be worthless. And to me, that's got to stick to your normal vanilla, I hate to say it, traditional sources of finance. And to be honest, that point goes.
But are they not becoming outdated though? Are these people not looking at it from a point of view whereas this is the future and I am going to bet my money on this being the future? This is now going to be the oil of when the oil and the industrial revolution was kicking off, and those that had, you know, good shares and money invested in it have never went broke since because they backed it to the hills then.
Yeah, no, it's a good point. It's a good point. Now, in terms of an investment, so there's one thing using it for cash and being paid and transactions, but then the other element is the investing. And before you mentioned gambling. And what I would say is, as long as you have property, as long as you have stocks, as long as you have bonds, even commodities, or you want to trade currency, then until someone can explain to me how you actually make money in more ways than one other than speculation on digital currency, then I'm not going to be interested. Because, for example, you buy property, either the price goes up or you rent it out and you make money through rental. You buy digital currency, there's no yield, there's no ongoing income from that. You're just hoping that someone else out there, your mate in the pub, is going to buy it. And then his mate in the pub's going to buy it and the price will go up. And even then, there's so many different types. So it's pure speculation. And it makes the headlines because the returns are so high. So it's because it's so sexy, it's like, oh, well, you must do that. So...
But then, so from stocks, you don't see stocks the way I see it. Like I see it as a bit of a gamble when you're playing on the stock market and stuff. Do you think that is a more sensible kind of way to kind of steadily invest?
What I'd say is only really consider investing in things that you can afford to lose as a starting point. Okay. It's not to say that stocks are gambling. It's that they are. It's more about being educated and being more familiar with how it works. For example, I wouldn't go embark on digital currency because I don't know enough about it. Whereas stocks and bonds and alternative funds, etc., they're what I do day in, day out. So, and the reason why in some ways I'm slightly biased is because even though I'm 29, I'm working with clients who are from the age of 30 to 80, and they've got pensions, they've got portfolios with this stuff in them. So it's not just a story in the pub from Dave or Billy. It's actually, I'm seeing this and I'm seeing it over time grow at various companies I've worked at. It's vanilla stuff. They're not doing no exotic trading. There's no trading 2-on-2, buying buying low, selling high,
yeah.
and there's no leverage that you might see in some of the films in Hollywood.
Well, this is what I was about. Just as we was talking then, and you mentioned Warren Buffett, I was thinking that was what we hadn't put down. But who are your financial gurus? Who are the people that you look at and say they're solid business people? Then they're not so solid business people. Then because I think that's quite interesting as well. The fact you mentioned Warren Buffett there, and then when you said the Hollywood movies, obviously everyone's thinking Wolf of Wall Street and Jordan Belfort or whatever his name is. Who are yours that you feel that resonate with you as a working class lad from Liverpool?
Yeah. Okay. Well, to be honest, I mean, just to name one of a few. I'm not sure if you've ever seen the film Pursuit of Happiness.
Of course, yes,
one of the best films. I like that for numerous reasons, but the main guy in that Will Smith portrays, Chris Gardner, he actually goes on to get an internship in this sort of
hedge. It was a hedge fund?
It's a hedge fund, yeah, and then he goes on to make his own.
So explain to me, because again, just through watching the film, I felt like I knew what it was, but I'm just chatting shit. I don't know what a hedge fund is, and I'll be the first to admit it. What are hedge funds and stuff like that?
Okay. So a hedge fund is basically long and short is how can I put this?
It's a big pot of everybody's money.
It's how can I put this? Okay. So imagine you wanted to bet on a football match, right? On a specific outcome. So say Liverpool to win, right? A hedge fund might well be, they're not necessarily interested in whether the stock goes up or down. Okay. What they're interested in is whether or not someone else makes the right call. So it's a lot to do with something called derivatives, whereby the investment is a derivative of an underlying asset. Okay. So it's like me saying to you, the price of a house could go from 100,000 to 110,000, okay? And I could have a hedge fund set up whereby even though the house has gone from 100 to 110, actually we're only interested in whether it's gone up 10 or 5%. It's hard to explain, but all you need to know is hedge funds don't necessarily influence the actual economy too much, because what they're basically doing is betting on, and hedge funds are betting on the direction of other assets.
Okay.
The main things really are what you'll hear about equities and bonds. So equities being like buying Just Eat shares, BT shares, HSBC shares, whereby if you own those shares, you are effectively a small, tiny fractional owner of that company. And if that company makes a profit and decides to pay dividends, which they've cut recently, you'll get a slice. So you get a nice little check on the post or whatever. Well, digital transaction.
Yeah, you should do. Okay, so Chris Gardner being one, obviously, I think most people would have seen The Pursuit of Happiness. What was it about him, or his person that kind of...
To be honest, it was a case of, I mean, the film's great, but it was the fact that he'd obviously worked so hard to get what he wanted to do. And he started out, I think, as an engineer or something in the army, and then he switched. So going back to the university talk before, it doesn't matter if you start off on a particular path, as long as you've got good intentions and you're willing to put the hours in, then naturally you'll end up where you're supposed to be. And basically he worked his way up, set up his own hedge fund, and I think it's still going to this day. Now, even though that's hedge funds and that's not something that I deal with specifically, I don't buy hedge funds for clients because it's too spicy. The aim of the game is to not to make gazillions of pounds, it's to make sure that you do the sensible things often, consistently, and if you do that long enough, you'll be on the right trajectory. I mean,
is this why I feel like, I haven't read it, but a phrase that I've heard, and I know we're going to probably delve into it, rich dad, poor dad. Is that another one?
Yeah, that's another. So Robert Kiyosaki, the Japanese investor, obviously based in the US. I actually only came across his books about 2 years ago, and what he really does is he's an investor and he focuses predominantly on property, which I don't strongly advocate, but it should be part of your portfolio. Okay, so if you make an album, the song 12 songs, they shouldn't all be about the same thing. You've got to give something for all the different audiences, right? Same with investing. You shouldn't just have equities. You shouldn't just have big companies. You shouldn't just have small companies. You shouldn't just have companies in the UK, US. Now, Robert Kiyosaki...
Is that why you have someone to manage it for you, though? Because I feel like there's a lot of moving parts. Like, if you just said that as an album and you're catering for, it might be a hip hop based album.
Yeah.
You've got to cater some songs for the girls. You've got to cater some songs for the club. You've got to create some songs for the man them.
Yeah.
Like that's a lot going on. But as you're the artist, you've got the control over that because it's your story
Production,
and it's your production. Yeah.
Yeah.
Whereas if you are building a portfolio, I feel like if I was to just go off on my own now and, I had 20 grand spare and I'm like, right, I'm going to make this 20 grand work for me. I wouldn't have the foggiest clue.
So,
I would probably put at least 70%, maybe 80% all into one thing, being like, that's my big money maker. And I'm going to just hold on to this other little fat 50% because I'm being a little bit more safe and I might do little bets here and there or whatever it might be.
Yeah, no, and that's the main thing there is at least you're thinking about it. Now, whether that is probably too risky because you're putting all your eggs in one basket. And really, no matter what you do in finance, life, whatever, as long as you diversify and you keep your options open. Just to go into some detail about what you said there, if you were to plough, say, 70% of 20 grand into one company, say Just Eat because you love takeaways on a Saturday, let's just say, then you're relying on Just Eat doing well.
But they've done really well this
year.
They have done
well. And how many companies that were in the same sort of group 2 years ago when it got listed they're not listed no more because they fell off.
And this is what you don't want to be the blockbusters, but then at the same time, you want to be on the Netflix wave. But I'm thinking now, like, what was it? All these vaccines that at the start of the year were redundant because there was no purpose for them, all of a sudden now are like gold because and it's the same for hand sanitizer, it's the same for PPE equipment. And like, are there people out there at the minute that are winning purely because they've just been in the right place at the right time and just seen? I know that, like yourself personally, you're dealing with all these portfolios.
Yeah.
Did you look at some of them and think these guys have got some big dollar? Yeah, they need to invest in a little bit of PPE and hand sanitizers.
Yeah.
And they're probably looking at you thinking at the time, why, Tom?
Yeah.
What is this? And you're thinking, the supply and demand, the government are giving all these instructions in the next couple of weeks. Trust me, the stock price for all of these products will be. Was you having them kind of conversations, or did some of that stuff kind of slip under the radar, which would be understandable as well?
To be honest, going back to what I was saying before about doing the right things consistently, it's not sexy. Making money, becoming wealthy is not. It's not sexy. Okay, in the same way. I mean, I wish Marcel was here. I mean, he's a big guy. Yeah, anyone who's been in the gym for more than a month would know. How do you get big? You sleep well, you train hard, and you eat well.
He'll tell you.
It's not sexy, and it's hard work. You got to do it every day, and it's the same with finance. You've got to be disciplined enough to save, not be distracted, spending it on willy nilly.
Frivolous, would you?
You've got to sort of be consistent and let the money work for you. And the thing is, similar to the sort of the gym as an analogy, you'll only be able to lift well heavier is if you lift heavier tomorrow. So you've always got to challenge yourself. And when you apply that to finance, you've got to invest. So you pay dividends so that when your dividends pay you money, you then recycle those dividends to get more money. So then your patterns are going from £1 to say £100 in a year's time. And that's what they start to call passive income. Okay, so you'll hear a lot of the phrases over the internet of generate a passive income today and blah 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 blah. A lot of Ponzi schemes, to be honest. But really, what it comes down to is,
are they like the new pyramid scheme for our generation, then, or?
I mean, there's all kinds of variants out there, but what it comes down to in finance,
are any of them worth the wait? Any of them worth anything, or some better than others? Or
don't get me wrong. I mean, going back to the girl we talked about before who done the law degree and applied for a job at McDonald's and didn't get it. I can't say black and white that one is better than the other. All I can say is on average, that's a route that I wouldn't necessarily go down. Yeah. I can only go off what I've seen work for lots of people. Yeah. And what it comes down to really is as much as you might like a particular company, I mean, no one would have been able to have predicted COVID. Yeah. No one really knows which company can come up with the cure that we all want. Yeah. In the same way that no one really anticipated how much Tesla would take off with electronic cars. So you might have one guy who's like, no, vaccine, there's a company and they've got a plant in the Wirral and they're hiring loads of people and they make PPE equipment, but then someone else in Belgium is talking about another factory over there. Okay. So how do you really know? How do you really know? So with the benefits of hindsight, great.
Okay.
And
time machine and all that.
Exactly. Yeah. And the best thing you can do is say, okay, I'm going to have a diversified portfolio of multiple assets, so equities, bonds, property, currency, whatever it may be, and consistently save. Okay, be disciplined enough, and obviously only invest what you can afford to lose. Because if you're thinking about taking money out of a pot because it's gone up because you've invested in a vaccine producing chemical company, then would you really invest in? Should you not be trading? And if you're trading, then it's a different conversation.
Ball game.
Yeah.
Okay, so with that being said, then how? I've got like two questions that are both sat at the top of my head. So yeah. I just say them both, and then we'll dissect them both. So the first one is, how much of your, if you're just doing with your salary, should you be saving at any given month to be kind of on track to having savings is one thought. And then the second thought, you said diversify your portfolio.
Yeah.
How do you get your foot on the ladder of one of the extras that you could be doing? Okay. And take it, tackle it however you want.
Okay. So firstly, go back to the first question is quite important, really. What I'd say is, obviously, you're paid X, yeah? And everyone's got outgoings, right? Everyone's might have some debts, whatever. The first thing I would say is, before you even think about investing, which is question 2, or saving, you want to really have a good grip of, well, what's going out? Really sit down and evaluate, what am I spending money on that I don't really need? And have a look and thinking, £300 pair of trainers versus, maybe taking £200 off the overdraft, okay? Because Christmas is coming up, you want to look good, whatever it may be. And it really starts with yourself, and you've got to be honest and say, you know what, can I afford to do that? You might want to look at the circles. You didn't think, am I feeling the peer pressure, really, of, do I have to wear this type of clothes or have this particular car, live in this area because of my friends, etc.? Because they might be earning different money to you, but you're still friends. And so what I would say is evaluate.
It's about being in your lane. Then
stay in your lane, exactly. Yeah. Daniel Sturridge has got a good saying. He always said, made it as a footballer, but no matter what other strikers are doing, other players, you've always just got to focus on what you can do, try your best. And to be honest, it's a case of taking a...
So there's no perfect formula then is what...
There's no formula, and really it's a case of how much do you want to be a bodybuilder? Well, it's a personal question.
Look at me, man.
Well,
you sat down with the wrong coach. You're asking the wrong coach.
It's a case of, well, everyone's got a different view. Some people just want to be fit. Some people want to compete. Depending on that, how much of your day you're going to allocate to your diet, to your sleep, to your training. Okay. If you want to take investing seriously and have your money work for you, then really it's a case of be sensible, just sort of not to give any advice, but just general guidance. Clear down your debts, paying your highest interest first, okay? Because paying interest is dead money, yeah? Then, which I'm sure everyone has realised this year, is once your debts are gone, you want to really try and build up an emergency fund. Okay. How many people this year, all of a sudden, lost a job? And they didn't have, never mind, they didn't have savings, they had credit cards, they had loans to pay off.
So what I would say is mortgages to pay all of it.
Exactly, they've got kids, bills, etc.
The outgoings don't stop
because your bills, your credit card company doesn't care whether there's COVID, because on the piece of paper it says you owe us £200 a month with 6.5% interest. How many weddings got postponed? How many holidays got postponed? The first thing is it's clear down your debt, then start to save. In terms of formula, they say you should have 3 to 6 months of your outgoings a year as savings. And that might sound ridiculous.
So break that down for me.
So, for example, let's just say you earn 20 grand a year, right? And let's just say you spent, let's just say 10 grand a year on outgoings, everything. So really what they're saying is you should have 3 to 6 months, so between 2.5 and 5 grand as savings.
As savings, okay.
And that's if you earn 20 grand.
Wow.
Because, and it's not a bad guide, because when you think about COVID and how long it lasts, how long people furloughed, etc., is about 3 to 6 months. Yeah. Now, we've never had nothing like this before, and I've told lots of people that in the past, and like, oh, it's all right, I've got a job, it'll be secure. And next thing you know, people in all high-flying jobs being made redundant because it's easy to let people who got high salaries go. Because and you keep the younger ones who are fresh, half the wage, etc. So pay down your debts, highest interest first. You want to...
I think that's a crucial one, because I don't think again, depends on where your interests are or anything like that, but I don't think people would pay that finer detail. I want to pay off my debts, and that might be their outlook for the year. This year going into a new year, I'm going to pay off my debts here. I've got this credit card I want to pay off before I go on this holiday, and all these little things. But I don't think they would consider or consciously consider the order in which they need to do it, which is going to benefit them. So just say that again, because I think that is a really important thing.
So if you've got any debts, I would say always try to speak to the provider or the lender or whoever it's with. Even if it's a PCP on a car, which you can't pay back, it's a monthly payment, it's still important for you to know, for your own knowledge, what's the rate of interest.
Okay.
For example, I've got a mortgage. I recently remortgaged. It's about 1.5% interest. But I've got a loan that's 6.9%. So the levels are way different. But at least you know what you're talking about. It's important for people to know how money works, how interest works, and what they're paying out, because interest is dead money, and that's the first thing stopping you from even investing, whether it be Bitcoin, a hedge fund, or Tesco share price. Sure. And then the second point you mentioned, which was how would you even start? So assuming you've paid down the debts, you've saved up the money, it's not just a case of saving, it's a case of, well, there's something called tax relief, whereby if you pay £1 in, the government will top it up. Now, most people think saving, you just put £1 into the bank account and it's £1, okay? But one thing that people pay a lot of financial advice for is because guys like me are constantly aware of the market as to where you can get these tax reliefs. So without you even investing in something like Just Eat or Bitcoin, your pound is automatically £1.25. And another important thing for people to be aware of is something called compounding. I think Albert Einstein said it's like the 8th wonder of the world.
I've not heard this term.
So before I mentioned about when you invest and you get paid a dividend, which is like income for owning a share in a profitable company, if you recycle that dividend to another asset, you own 2 assets even though you originally only bought 1, and then that will just multiply. So just think like normal population growth. Man and woman have a kid, it goes, next thing you've got 2 people to 6 billion in the world. Because people make people, money makes money.
Oh, okay.
And you want to know what's stopping you from even getting to that stage. It's your debt and your interest. The next thing is, well, before I even invest, am I maximizing all my tax reliefs? Okay. If I'm a
So even if you're, but as I say, so I've got a full-time job as well. I'm not in that position to get tax relief, though, am I? Or the little tax breaks that I would get are very small in comparison to someone that might potentially be...
But it's all relative.
Okay.
Because someone who's a millionaire is effectively allowed the same tax reliefs as you are. It's just that what they're allowed to pay in and what they can afford to pay in is different.
It's different, okay.
But it starts with knowing, well, what are they, okay? And you might not think because of your earnings that you can use them, but you can. Your pension, everyone can have a pension. Yeah.
Well, this is what I was going to ask you. It's I don't know whether we need to do a proper conversation around pensions, because I'm in one, but at the same time, I'm a little bit like, it's going to be pointless. Can they genuinely guarantee by the time I'm going to be 65 that I am going to get the dollar that I've put into whatever the pension is? I just don't see that happening in this world anymore.
Okay.
So then I'm like, my other side of me is like, well, if I'm never going to see the money and there's no guarantee that man's going to get to 65, I'd rather just get life insurance and pay that same £6 to £8 a month. And anyhow I pop my clogs, someone that I love
will get the
is going to get, and they're guaranteed to get that dollar, which then to me seems like
a better investment,
or one of the ways that you could now, which we was going to touch on, was to kind of break in that chain of intergenerational wealth, because coming from a working class city, working class background, the pair of us, we're not born with silver spoons in our mouths. We're not born with someone giving us assets and giving us, a leg up in that respect. Does what I've just said, does that make sense?
It makes perfect sense, yeah.
Okay.
And there's a couple of things there. So firstly, there's never any guarantees with anything. Because the rules can change all the time. Okay.
But I feel like they hold the purse strings and they took all that money all those years and then could just turn around and like, yeah, we've not got it. Like Arcadia's going under, which is like Topshop and all of them and whoever else he owns. And they could be losing their pensions. Now, people could have been working at Topshop for the last 25 years, do you know what I mean? Or whatever it is.
No, that's a very good point. And that comes down to, I mentioned before, about diversifying. If 30 years ago you decided to work for Arcadia and build up a pension with them, then the risk is that you only ever work for them. You put all your eggs in one basket with them. Now it's slightly different with the pensions because you can invest in a whole host of companies. You're not specifically tied to one. So even if one goes bust in 30 years, based on the way things are set up now, there's going to be minimal impact. Okay. There's never any guarantees. It's not so much linked to the gambling point you mentioned before, but it's a case of it's getting into that mindset of there's no guarantees, but what's going to improve my chances of getting there, okay? It's like if you hire a tutor for anything, you hire a PT for anything, okay? You can't guarantee to lose. It's what can I do to improve my chances of getting A, B, C? And it's getting out that mindset of there will never be any guarantees, but positioning yourself and being knowledgeable, financially literate as to, okay, well, even if in 50 years things don't work out as you expected, you can always look back and think, well, based on the information, then I done everything I could to get me from potentially there to there. And the other important part of the life insurance...
Let me just... in my mind then, from as I say, the whole pension, flipping between either a pension or a life insurance thing, most people then would pretty much just kind of hedge the bets and have both. I imagine then it's probably the safest bet to say, right, if I have them both, and even that might be 20 quid a month out of my wage going towards something, you know whether you're going to get your little chunk when you get to 65, and then you also are aware that potentially your family could get, in the unfortunate event of you passing away, would still be in receipt of something as well.
Now, it all comes down to affordability. Whether you decide, you know what, 100 quid, and then that's going to be 80 pension, 20 life insurance, or vice versa. You've got to think, well, if you decide or you think that life insurance is better now, then hypothetically, if you do get to 65 and you are still alive, you're going to think, well, now I haven't got a pension. So then I have to carry on working. And what they're doing is they're pushing back the state pension age. So just to be clear, everyone who gets paid, they've got a pay slip. And on the little number at the bottom says national insurance. So that's like another tax that everyone's got to pay, no choice. Pays your fireman, your bins, your state pension. If you're paying that enough years, 30 years, by the time you get to a certain age, the state pension age, the government will say, you know what, you've been a good citizen, we'll look after you. And it's a good investment because if you get to set age, you'll get paid it by the government. There's no ifs or buts. What's an if or but is when they push that age back. So you're thinking, okay, you've got to pay the national insurance regardless. There's no choice about it. Everyone is living longer. You might have family history, health issues, vice versa. Everyone's different. Now, if you have just life insurance, obviously you're going to be relying on that state pension. But if by the time you get to 65, you get it at 90, you're then sitting down with your partner or your kids going, sorry kids, I can't be at home as a 65-year-old dad or granddad because I've got to work because I've got my state pension. So then you think, okay, I've had life insurance, but if you're still alive, there's no benefit to them.
And you can't take equity out of your life insurance, can you?
No. I mean, it depends on certain policies, but the way it works usually is you pay a monthly premium. So I pay, say, 70 quid a month, okay? And in the event that anything happens to me, there's a payout to my family to pay off things, debts, mortgages, vice versa. Some people don't have life insurance. And from a financial advice point of view, that's like one of the first things you should be looking at. Not investing. And not even so much your savings, because a lot of people who got struck with COVID, for example, not only did they lose the job, they might have passed away. So before they even consider how much savings they had to live on, they're not here. So there's families are then left with no income, funeral bills and a mortgage to service, but there's one less income coming in. But because it has happened,
100% it will have happened.
And
no, sorry.
I don't even think about that level of things that's happening, especially with what's going on now. Everyone's you think about what everyone else is going through, but at the same time, you're trying to keep your own shit.
Trying to juggle all your plates. Honestly, and I mean, okay, it's not the sexiest thing to talk about, but this is real life. And
This is why I wanted you in though, because in my mind, I'm like, these are the things that, whether everyone's like, oh, we're woke now and all, fuck all that woke shit. This is the shit right now that's like honestly, genuinely going to make a difference to somebody.
Honestly, like people say, oh, you know, I'm not paying for that. I've got my mobile phone's 40 quid a month, my car's 200.
If you're paying for, as you're saying there, your Netflix and all these other subscriptions, your Amazons and everything else, what is the extra, like your premium 70 quid, but what is it if you can get on a package that's £12 a month?
Listen, I mean, I've seen some policies as low as £10. And obviously it's all relative, so whatever you pay, it's what you get.
Yeah.
FYI, the sooner you get it, the healthier you are, the cheaper it is. So if you think, oh, I'm not going to get it, I'll wait until I'm 50. But by then, if you try and get it 50, because your health's worse than your age expectancy, they're going to price it up. So you think you try, I'll try and be clever and I'll try and...
Yeah.
But it always comes out in the wash. And
you want to get it before you're 30.
Basically, and especially if you've got like debts kids or a young family. Kids. I mean, if you're a one man family and you're playing Call of Duty every night and you're on your own, you've got no one to provide for, then it's fine because you think, well, if that happens to me, no problem.
But then, even in my mind, I feel like even that's selfish. What about your mumsy? What about your dad? Or you might have brothers or sisters, and people like, no, money can't bring happiness and money can't bring somebody back. But if, God forbid I passed away and I was in that position, I've got my life insurance and all that, I know that my younger brothers and sister are going to be able to not have the financial stresses and struggles that I might have not then had in my 20s, and that should be able to give them a little bit more financial freedom to make hopefully better decisions.
Yeah, and as you say, it softens the blow. It's just trying to make life easier if anything bad happens.
And is that a means to being able to break the cycle of that intergenerational wealth then as well?
The reason why I'd say no is because unless you consciously make a decision to educate yourself about finance, like this is why a lot of lottery winners, you hear them going bankrupt because they come into new circles, they spend things that they wouldn't have usually. They don't learn how money can work for them because $1 million comes in the bank, they pay off the mortgage, fine, then they go on loads of cruises or holidays or cars or whatever. All the assets are depreciating unless it's a house. And then next thing you know, they're having to go back to a job because their income stayed the same, but the cash windfall they had is just gone. So that's why I talk about learning about compounding, learning about investing in shares, because you might start off small, but it's something called exponential growth, whereby it doesn't go up in a straight line. It goes up like a curve. It grows on itself. So a life insurance payout, whilst it might address the immediate problem of paying off some debts, and it might soften the blow, it won't necessarily do enough to make sure that your family don't have to work ever again. Okay. Because they'll probably then think, okay, that mortgage is gone, but we've still got the car. Yeah. Whereas the flip side is that with a pension, it's invested as you work. So, for example, you work now. You earn money now. Every month you pay in. Okay. You invest it in vanilla stuff. It's a bit boring. Okay. You do that enough for 30 years, then you've got a pot of money. Okay. Now, what's interesting is most people don't understand that. Like a life insurance policy, which will pay out on death, when you've got a pension, you decide 100% going to mumsy, 50% going to younger brother, 20% going to Billy, Bitcoin, whoever. It's you decide where the pot of money that you've left goes to. So it's a bit like a life insurance policy. The difference being that
you're still around to
make that decision. To benefit from it. And the difference is, FYI, your pension, your private pension, is private to you. So it's not set by the government as to when they pay you it.
Okay.
So as an example, at the moment, you've got to be like 67 to get your state pension, which is based on your national insurance. Whereas your private pension is based on what you pay in, and you can get it at like 55 onwards. Still, But the point being is it's earlier than what the government set. Okay. So
just before we kind of, I think, again, as a general overview, I think we've touched quite a lot, and I've definitely taken, I should have really had my pen and paper with me on this one to just make some notes.
I
can watch this back just now. But just before we wrap everything up, what money advice would you give your 19-year-old version of yourself today, what would be that advice that you would look to give yourself?
Okay, what I would say is try to really focus on what it is that you enjoy. Okay, and then try to become the master of it.
Okay.
Like better than anyone else. Because it's all good and well trying to cut back on Netflix and pension and petrol and all the rest of it, but if you can find a way to get paid for something you love, it's not a job, firstly. And furthermore, you can use that. If you have a job now that, let's just say, you don't love and you're just doing it to get by, if you then go and pursue something you really enjoy of an evening or a weekend, whether that be podcast, doing a football team, or, I don't know, mortgage advice, I don't know, you can then start to build up another income stream, which will then, you don't then have to think, I'm going to cut back on Netflix, okay? Because your capacity's gone up to earn, okay? And then further...
So the earlier you get into that...
it's about having the mindset of, okay, we're on this earth, you don't just need one job. There's not just one way to make money, okay? You mentioned before about singers and royalties, okay? They make a song, they get paid indefinitely. Mariah Carey, I think she gets paid
every
millions
Christmas.
for that Christmas, that Christmas song. So it's a case of...
That's what you want. If you want to be rich, just make a Christmas banger.
Just team up with Mariah Carey. But
for the remix.
Honestly, but it's a case of clearing down your debts, being sensible, building up a bit of an emergency fund. If you can, start to think about ways you can build up a second income. Now more so than ever. I mean, on Instagram, you'll see businesses popping up. You've got, I mean, I'm not a big dessert person, but I had donuts delivered the other day because I noticed it was someone setting up a small business. They were making donuts, and I thought, you know what? To be fair, they're trying to do something, whether they've lost a job or not. Be a custom, especially you had David and Ollie and local independents. Try and promote. You don't really know what that one transaction means for that person. The feedback they get. I had my car valeted privately the other day. Again, I know it's cheaper to go to the high street and do it for a tenner. But again, to that guy, you don't really know his situation. COVID, everyone's sort of tight and all the rest of it. And he might be doing that as a bit of a side hustle. And before you know it, your side hustle will become so specialised, you're known for it, whereby it becomes your main job. You've got your own studio, okay? You become a football coach because you can bin off the office job, okay? You can become a full-time tutor because financial advice is a bit too vanilla, okay? Really just open your mind. And a lot of it goes back to that Robert Kiyosaki guy, so Rich Dad, Poor Dad. And it's trying to understand the differences between what it's like to work for someone and sort of being in control of your own destiny and having multiple incomes, whether that's through investing, a side hustle, royalties, property investments. But yeah, I mean, you could talk forever.
So, well, again, just before we wrap up, I think next time we get you down, I think we're going to have to discuss go into a little bit more detail about good debt and bad debt.
Yeah.
Just so obviously we can give people a little bit more, or you can get, like, I know what I'm talking about. You can give people more of an understanding of the terms good debt and bad debt. I think that would be a very interesting talking point. And just lastly, where can people find the MBE Academy? So I've got a website and Instagram. I'll give you the links. You can share them and stuff. But really, what I do, as I say, I give advice of a day, and really, it's anything to do with like private tuition or even anyone who wants help with sort of job applications. It's a tough time. No one really knows how to do a CV. They don't really like doing applications, even interview prep. You can see on the website to try and help them more ways than one. Don't be greedy with the knowledge, is what I say. So. Smashed it. Yeah. No worries. Well, thank you for coming down. Thanks for having me. I really appreciate it, man. Thank you very much. Thank you. As I say, this has been a very special episode of the group chat. You've been with your boy Errol, and we'll be back soon.